A little under the market maker's expected move at close here today, but not quite down as far as I was hoping we would hit. We came close, like 60-29. I was thinking 60-25 would be where we found support if those shorter dated long puts down there took some profit. Watch out for those tomorrow. If we slip them in the first thing in the morning and they take profit, it could cause a bounce back to like 42, especially if like the CPI data is bad. So watch those like long puts as a reversal point. So say we slip to like 60-20 at open on, not great CPI data. Be very careful if those puts close that it doesn't just rip back to like 60-40. Because it could. What? No, it doesn't mean short Carvana. Carvana's still doing payment in kind stuff. Almost a test of 60-35 here on futures. We did fail the 60-65 level. Looks like a pretty decent continuation of the downside move. There's plenty more room to go. However, 60-35 should not be a major support. So I think it's over time, it's more than possible to get down to like 6,000, which will be one of the bigger CTA levels. And so that test is arguably far more relevant than the test here at 35. But look for support anyway. It could be kind of important. Dollar and yields both up today. Mostly moving at the back end of the curve, but a little bit at the front end. Looks like the 3 month fell. 6 month didn't come up too much, but like 2 year and higher all rose quite a bit. Broad commodities, it's like 27% gain. I think oil had an okay day. It was doing better earlier. Gold and silver both up, but copper down. Looks like materials are kind of mixed. Agricultural kind of mixed too. So, this had gapped up yesterday on the back of the Chinese stimulus. However, excitement about that quickly petered out. Correlation starting to pull back a little, but not enough that I would be confident that the dispersion trade is breaking down in any kind of meaningful way. We are getting a move in 1 month correlation that's slightly greater than the move in 3 month correlation to the upside, and that might be indicative of near-term bearishness. But in order to confirm like a breakdown in dispersion, I would want to see the move in core 3 month kind of start to align with that, and they're starting to align a little bit. Um, but the divergence between them isn't that significant yet. Forward yield on volatility up now to negative 2.53%. Getting closer to positive as we start to see the yield curve move a little closer to inversion. Leverage on the short end of the carry, not very significant, but big moves today and leverage on the longer end of the carry out from the 6 month out to the 10 year. You can look at them all individually if you want, but pretty big moves and leverage up. That could be a sign that we're going to get some bullish turnaround here, especially if the dollar continues to move up with CPI tomorrow. That additional leverage might be bullish. So keep an eye on that. 8x isn't that crazy on the top end, but if it starts pushing up to like 8.1, 8.2, we might start to see the effect of that in equities a little bit more, or at least in short vol. Yeah, still no significant moves in bond vol. Probably not until the Fed meeting, but for now, bond volatility continues to fall alongside the 3 month correlation. Skew turned around a little bit yesterday, but not very much. I mean, it's still very close to all-time highs. If we see that continue to move down with tonight's print, which will be in about 8 minutes, might be a little bit of a bearish indication for tomorrow. We are seeing more bearish positioning, and it's kind of telling us that. 41.94% of the S&P above its 20-day moving average. This continues to fall off as the concentrated positions that were holding the market up begin to sell off in line with everything that has already been selling off for the past 6 days. Also, this is an important one. Correlation picked back up yesterday and today, pretty quickly between VIX and cash VIX. Obviously, some of this is due to us moving closer to the VX expiration next Wednesday. But some of it's also, a turnaround in the volatility environment and short vol starting to pull back. Now, as that volatility loosens up, if that forward yield on volatility goes positive, we'll see demand for volatility increase, and that could drive cash VIX higher, or at least volatility expectations higher. Fed fund futures pricing in 0.35 cuts for June of next year, so still not very much. There is like an 88% chance of a cut at the December meeting this month, but I don't think they have any reason to, and I think they've been pretty vocal about that. However, if they don't cut, if they stop the cutting cycle, that is going to probably be viewed very bearishly, and we may see pretty significant reactions from that. So, I mean, that's not this week, it's next week, but CPI could go, like hotter CPI could go a long way to changing those expectations on a Fed cut. The 10-year, 2-year spread moved out a little bit, so a little bit of bear steepening today, which we can already see, but not much. I mean, not a lot of change day over day for the 10-2 spread. And sectors today, looks like tech lost pretty hard. End of day, tech services not doing so great. Google really holding shit up on the NQ side, but the sell-off in Nvidia just demolishing things. Looks like retail pulled it back a bit into the end of the day. Producer manufacturing, health technology, and finance getting hammered. Consumer durables, well, just Tesla is still holding up. And UNH kind of clawing back a little bit over in health services. So, but Oracle, Microsoft, Salesforce, Palantir, all down today. So, some pretty big hits across tech services, even with the gains in Google. Doesn't look like it mattered much. I know GME had earnings tonight. Looks like they beat on EPS, which is what I said. There's support at 25 on the options chain. I don't think the market maker expects it to move much below that. But if they don't release any kind of guidance or mix anything up tonight, I wouldn't expect anything substantial out of this. Probably just vol crush into tomorrow. And if that vol crushes, probably not good for the share price. Especially once those 25 puts that are sold fall off December OPEX. Not great. We gotta dilute more. I mean, they definitely don't need to dilute more. But, I mean, I'm surprised they didn't dilute when it hit 30, honestly. Cohen should have. You should have kept pace with that. There was no reason not to there, but definitely not worth diluting at 25. So that means he'll probably wait till he goes to 20. Yeah, well, he's an idiot. Yeah, well, that's the problem is, I told everyone this, that despite the money that they're accruing, their core business is still dying, right? So they're accumulating money from share offerings and interest payments, but then, revenues from the core business are declining. And so, you kind of end up just flat. That's why nobody wants to give it a higher PE ratio, despite it being like a profitable company in 2024 when nothing else is. There's no future value to the current investment, so why price it up? Also, at a $11 billion market cap, making $17 million a year is not impressive. Well, people are willing to pay $60 per dollar earned on Nvidia shares because Nvidia's promised unparalleled growth into the future. Anyway, yeah, not too impressed with their earnings. I thought they would have been a bit better than that. Well, I wonder what they're doing with all that money, because they should be yielding 5% on it. Why do you need me to say something positive about GME? I did. It's gonna probably stay above $25. I would say positive things about it if they would do something positive. I'm not just like biased by my absolute and unabashed hatred of Ryan Cohen, but they need to do something. There's a fundamental problem there, and they're not addressing it. Yeah, I did say EPS would be positive. Pickles on parade. Anyway, I'll see you guys tomorrow. Have a good night. Later.